Alrighty, traders. This is Blake Morrow. You are listening to the Daily Roundup. I hope everybody's having a great session right now. Just want to let you know the whole time change. Without fail, it screws up everybody every year. Fortunately, it's only a week because we do have time change next Sunday, which is odd because it's usually 2 weeks. I don't get it. And I'm not going to pretend to even get it. I'm not even going to like make an excuse like, oh yeah, this is exactly why it happened. No, because I don't know. I really don't. Anyway, so I'm just glad you guys are all here. So let's talk about the market and what's happening. So the S&P, this is interesting. We actually broke 3,400 and we are actually holding below 3,400. Now that to me is actually a pretty big deal. The fact that we're holding down here is a big deal to me. So what we have to be thinking about, and I want you to think of a couple of different things before we move on with the S&P. One of the risks right now, well, actually, there's a few risks. So let's talk about like one of the major risks. COVID numbers are really creeping higher. You know, I was at a pumpkin patch this weekend. You know, do you guys know what a pumpkin patch is? You know, it's where, you know, there's all these pumpkins and we're getting ready for Halloween, and it's kind of a fall tradition. And there's kids everywhere doing kids stuff, and there's people everywhere. It's outside, but it's a pretty big thing. You know, we were out there this weekend, and you know, masks on, and there's a lot of people that didn't have masks on, and even though it was open air, I mean, it's still, you know, and frankly, like I think about COVID, and I could definitely get sick. There's a good possibility I would, be fine. But regardless, it's still pretty contagious. And that, I think, is the thing that, everybody has to remember. It's very contagious, and it does, even if it just gives you flu-like symptoms, you still are probably going to be down for a couple of days, maybe even a little bit longer than that. Some people obviously more serious than that. So the problem is when the infection rate starts to, or the numbers or cases start to go up, it's probably freaking the market out just a little bit. And so I think it's something we need to really pay close attention to. Now, also, we have an election that's coming up. So with the election coming up, and no stimulus coming, at least the best that we know right now, there's no stimulus coming. And I know they scheduled another call, but I mean, for today, but who cares? It's not going to get done ahead of the election. And then after the election, are they even going to be able to push it through, depending on what the administration even looks like and what the Senate and, and House look like? I mean, I don't know. And so a lot of these question marks are now starting to weigh on the market. And that's why I believe stocks are down a little bit. There are, obviously other things too. Brexit, you can probably name the whole wall of worry of things that might weigh on the market. But the fact is that we broke down technically. You can see we broke the 38% retracement right here. Here, let me just grab that. Okay. We wrote the 38% retracement here. And as long as we continue to hold down here, the risk is that we might, see 3,300, maybe even a little bit lower ahead of next week. So the question that we have to ask now that the market looks like it's breaking lower a little bit is, what are the currency ramifications of that? And so that's when you start looking at currency pairs like the US dollar Canadian, that's actually making a move to the 78% retracement, which, in the chat room, I said, that's the next stop is 132.20. The high today has been 132.18 thus far. But if we really start to move lower, you look at the dollar Canadian looks like we could trade it back up to 133. right? The US dollar Mexican peso is, you know, obviously something I'm looking to play to the long side. For those of you that are that already know, I'm long some dollar Mexican peso at 94. You know, there's a pattern in play that went out. I also closed out the euro. Now, the thing I worry about the euro is that we came down to support, but I'm a little worried that if risk off weighs on the market a little bit, we might have some dollar strength come through. So I'd rather not deal with the euro at this moment. And that's kind of my view with the euro, but we are consolidating. So if you are long, I think you're fine for right now. You just don't want to see it back below 118, I don't think. Because if we get back below 118, we're probably going to trade back down towards this 117.50, which will become really critical support as we intersect these two trend lines. You can see the previous triangle. So we would be, you know, not, testing something like this down at these two trend lines down here. So be careful if you're long. That's the reason why. There's a currency pair that I want to put on your radar again, because it's been off my radar for a couple weeks, but you might have heard me talk about it during the New Zealand elections. I want you to pay attention to the Aussie New Zealand. The reason why I want you to pay attention to the Aussie New Zealand is that we are approaching the 200-day moving average. Now that the New Zealand elections are out of the way, the RBNZ could be a little bit more dovish moving forward. And so if they are a little bit more dovish and maybe even start talking about negative interest rates, that's obviously going to give the Aussie New Zealand a boost higher. You can also see this is the 38% retracement technically. Okay, that low back in March to the high. We're at the 38% retracement from this low to the high. That's a 78% retracement that we're slightly below, but then there's the 200-day moving average right there. So what I'm trying to illustrate to you guys is there's a lot of support in the Aussie New Zealand here. I'm going to start looking for some longs. And I believe this 200-day moving average should support. We shouldn't drop back below 106. If we drop back below 106, we probably got a lot lower levels to come. But I'm going to start trying to look for longs. And then if we get back above 107.15, then I'm going to be aggressive, because then it would be like, you know, breakdown, reversal. Then we're probably trade back up towards 108 and change. So that's a currency pair I'd like to bring to your attention that's on my radar now. Okay. All right. With that being said, just be careful of equities here. I think equities being below 3,400, especially 3,410, it's not bullish. Okay. All right, guys. Have a great one. Thanks everybody for being here. Oh, I'm sorry. Let me see. Jason said, hey, Blake, any thoughts on why Aussie New Zealand so strong with the risk off? And do you think that the Euro Aussie, Euro New Zealand false breakouts? No, I actually think the Euro Aussie is good on the long side still. I haven't really looked too hard at the Euro New Zealand today, but you know, here we are respecting the 38% retracements still, right? 38% retracements. I think you got to get back over the 200-day moving average, which obviously capped us today. So no, I think with risk off, you know, they should perform better. I'm surprised that we aren't higher right now. Euro New Zealand, you know, that lower trend line still holding. We are around the 200-day moving average. So yeah, I think that they can bounce here. I don't, as long as stocks stay weak, yeah, I think they will eventually. All right. Okay, guys, have a great one. And thank you guys so much for supporting ForexAnalytix. I'll see you in the chat rooms, or I'll see you tomorrow morning on Face. Have a great one, everyone.